Hello, promoted markets. This is Ahura with BoE meeting review and market reaction. As always, let's first check what we had in the meeting. It's the results, and then the decisions, and then we can see and check the market reactions. So the Bank of England, they cut their rates by 25 basis points. This is what was we're expecting. We have been expecting because inflation is already under 2% central bank target. And economic activities in recent months started to slowing down, so they needed some support. But with this decision, normally, which means more dovish policies and less hawkish policies somehow, normally we should see some pressure in the currency because less inflation, less interest rates means weaker currency and increasing stock markets. But as you see here, the market reacted somehow reverse. The reason is because of not because of the market the central bank reaction decisions. It's because their outlook. During the week, we had the new government's first budget. The Labour Party, after 14 years, they took over the House, they took over the government, and now they had their first ever budget after 14 years. This budget is so supportive with we can say some very dovish somehow the budget because they increased the tax rapidly. They are starting to increasing the minimum wages. At the same time, they increase the prices in the different places. So generally, the government is trying to uh, gain more money, gain more because they started to spending more. So with the bigger government, which they need more income with the taxes, we can say that in the near future we will have more inflation. That's why the central bank they increased their inflation expectation to 2.5% for this year and 2.7% for the year after that for 2025. That means that the central bank is supposed to cut the rates by at least four times, each time 25 basis point in 2025. Now we're expecting to see less rate cut in 2025, which means higher rates will stay for longer. That means pressure on the stock markets, negative news for the stock market, and that can be somehow the positive news for the currency, which is you can see here. So in the short term, we can say that this means a little bit more support of the pound, but at the same time, GBP USD is the uptrend in the GBP, this reverse in the GBP USD is because of weaker USD in the last 24 hours as well. But generally, uh, pound can take advantage of this decision because higher rates can increase the when you have the more spread between the central bank interest rates in the United Kingdom and UK, for example, this carry trade means brings more demand for the currency in the United Kingdom, so more demand for the British pound. That can happen between the pound and US dollar and other currencies as well. So higher rates means more carry trade, more demand, and at the same time, so it can somehow support the British pound. But at the same time, we're expecting to see a little bit pressure on the UK's economy, which means this uptrend cannot last long. So for now, for this short term, we can say, okay, this decision and this outlook actually from the central bank in the United Kingdom can be supportive for the pound, but it cannot last long. In the stock market, since the higher rates for longer means more pressure on the stock market, we can say that this pound that UK 100 or the stock market in United Kingdom cannot take advantage of that. But at the same time, on the other hand, at the same time, also we are expecting more taxes. More taxes, especially from the companies, also means more pressure on the production side. So the companies on the production side, so means less income for them. So that generally this decision and this outlook cannot be positive for the stock markets. So more probably, we can say that pressure on the stock markets can continue for a little bit longer. And UK 100, which was, let's say, if you check the daily chart, UK 100, which has been facing too many challenges around this level to increase more, now it can get more pressure. So this news and this decision and this outlook with this new budget of the government, generally they cannot be supportive for the stock market. So we can say more pressure on the stock market, slightly pressure on the stock market, and supportive somehow for the pound, at least in the short term. This is the reaction decision. This is the market, the central bank decision, government budget, and market reaction and market expectations. If you had any other question, let me know in the comments. I will try to get back to you as soon as I can. Have a good time. Bye bye.